Hi everyone, welcome back to the Investing Iguana, where we talk about all things related to real estate investing in Singapore. I'm your host, and today we're going to take a look at the latest data and trends for the private residential market in Q1 2023. If you're new here, don't forget to hit that subscribe button and turn on the notification bell so you won't miss any of our future videos. So, what happened in the private residential market in the first quarter of this year? Well, according to the Urban Redevelopment Authority, URA, prices of private residential properties increased by 3.3% in Q1 2023, compared with the 0.4% increase in the previous quarter. This is the fastest pace of growth since Q2 2021, when prices rose by 3.4%. The increase was driven by both landed and non-landed properties, with landed properties seeing a bigger jump of 5.9%, while non-landed properties increased by 2.6%. Let's break down the price changes by region and property type. For non-landed properties, prices in the core central region, CCR, increased by 0.8%, which is slightly higher than the 0.7% increase in the previous quarter. Prices in the rest of Central Region, RCR, increased by 4.4%, which is a significant acceleration from the 3.1% increase in the previous quarter. Prices in the Outside Central Region, OCR, increased by 1.9%, which is a reversal from the 2.6% decrease in the previous quarter. So, what does this mean for investors? Well, it means that the private residential market is still resilient and attractive, despite the challenges posed by the COVID-19 pandemic and the cooling measures introduced by the government last year. The demand for private homes remains strong, especially from locals who are looking for more spacious and comfortable living spaces amid the work-from-home arrangements and social distancing measures. The supply of private homes is also expected to increase in the coming years as more projects are completed and launched. According to URA, close to 3,800 private residential units, including ECs, were completed in Q1 2023, which is 60% more than the average of around 2,400 units completed per quarter in 2022. For the whole of 2023, a total of around 19,000 units are expected to be completed, which is the highest annual supply completion since 2017. The cumulative total of around 40,400 private residential units, including ECs, to be completed between 2023 and 2025 will form part of the total supply of 100,000 public and private housing units to be completed over the 3-year period. The government has also ramped up the supply of private housing on the confirmed list for the GLS program to 4,090 units in the first half of 2023 from 3,505 units in the second half of 2022 to cater to demand. The government will maintain a steady GLS supply pipeline to meet growing housing demand. However, investors should also be aware of the potential risks and challenges that may affect the private residential market in the near future. One of them is the increase in additional buyer's stamp duty, ABSD, rates that was implemented on April 27 last year, which was aimed at preemptively managing local and foreign investment housing demand and prioritizing housing for locals buying for owner-occupation. Then, based on the latest new property cooling measures in April 26, 2023, there are increases in the ABSD again. Singapore citizens don't have to pay any ABSD for their first private residential property purchase. However, we must pay an ABSD of 20% for our second residential property and 30% for our third residential property. Singapore permanent residents and foreigners have to start paying ABSD from their first private residential property purchase at a 5% ABSD rate. Subsequently, they must pay 30% ABSD for their second residential property and 35% for their third residential property. Foreigners have to start paying 60% ABSD from their first residential property purchase. This is a very big change in the most recent ABSD increases from a 30% ABSD rate. The impact of these measures may not be fully reflected in Q1 data yet, as some buyers may have rushed to buy properties before they took effect. However, we may see a slowdown or moderation in sales volume and price growth in subsequent quarters as buyers adjust to the higher stamp duties and become more selective and cautious. Another risk factor is the uncertainty surrounding the COVID-19 situation and its impact on the global and local economy. While Singapore has managed to contain the virus outbreak relatively well compared to other countries, there are still risks of new variants emerging and causing disruptions to travel and trade. The COVID-19 situation may also affect the demand and supply of private residential properties in different ways. On the demand side, some buyers may postpone or cancel their purchases due to income loss, job insecurity, or tighter credit conditions. On the other hand, some buyers may take advantage of the low interest rates and attractive prices to enter the market or upgrade their properties. On the supply side, some developers may delay or defer their launches due to construction delays, labor shortages, or weak market sentiment. On the other hand, some developers may launch their projects earlier to capture the pent-up demand and avoid potential competition from future launches. So, how should investors navigate the private residential market in 2023 and beyond? Well, there is no one-size-fits-all answer to this question, as different investors may have different goals, preferences, and risk appetites. However, here are some general tips and guidelines that may help you make better informed decisions. First, do your homework and research. Don't just rely on hearsay or hype. Look at the data and trends for yourself. Compare the prices, rents, yields, and vacancy rates of different regions and property types. Analyze the supply and demand factors that may affect the market performance. Check out the location and quality of the projects that you are interested in. Visit the show flats and view the actual units if possible. Read the sales brochures and contracts carefully and understand your rights and obligations as a buyer. Second, be realistic and prudent. Don't expect to make a quick buck or a huge profit from buying and selling properties in a short span of time. The private residential market is not a casino or a lottery. It is a long-term investment that requires patience and discipline. Don't overstretch yourself financially or emotionally. Set a budget and stick to it. Don't borrow more than you can afford to repay. Don't buy more than you need or can manage. Don't let your emotions or ego cloud your judgment. Third, be flexible and adaptable. Don't be too rigid or fixated on certain criteria or expectations. Be open to different options and opportunities that may suit your needs and goals better. Be willing to adjust your strategy or plans according to changing market conditions or personal circumstances. Be prepared to deal with unexpected challenges or setbacks that may arise along the way. Finally, be smart and savvy. Don't be too passive or complacent about your investment. Monitor the market trends and developments regularly. Keep yourself updated on the latest news and policies that may affect the property sector. Seek professional advice or guidance from experts or mentors if you need help or clarification. Learn from your mistakes and successes and improve your skills and knowledge. That's all for today's video. I hope you found it useful and informative. If you did, please give it a thumbs up and share it with your friends and family who may be interested in investing in Singapore's private residential market. If you have any questions or comments, please leave them below and I'll try to answer them as soon as I can. Thank you for watching the Investing Iguana, where we help you make smarter real estate decisions in Singapore. I'll see you in the next video. Bye for now.